Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, and it's November 27th, the day before Thanksgiving and Hanukkah. Hope you guys have a safe upcoming weekend here. 4-day weekend for us. Today will be the last day for economic news this week. As we had mentioned, it's a short week this week. We got weekly jobless claims for economic news release. We got a bunch of them today, and weekly jobless claims will be the beginning. We had 323,000 people applying for unemployment last week. The forecast for this week was supposed to jump up to 334, but it came in only at 316. So a decent number right there, better than expected. We got the durable goods orders for the month of October, and we had 3.8% back in September. The forecast was supposed to be a negative 2.2, and it came in slightly better than forecast. So this is still supposed to look a little soft, but better than what the forecast came in at. We got the Chicago PMI for the month of November. This is the what's got the manufacturing in the Chicago region. We had a 65.9 back in October, and we were supposed to dip down to 59 in November. And it dipped a little bit, but not as bad as the forecast at 63. So in the Northeast and Philadelphia and New York, remember we've had pretty big swings in the opposite direction, but Chicago not hit as hard as we anticipated. We got the University of Michigan Consumer Sentiment for the month of November. This is the final revision. They do this twice a month, and 72 was the previous reporting, and it was supposed to go up to about 73, and it came in much higher at 75.1. So people are feeling a little bit better than where they were earlier in the month. So obviously a good number right there. And last but not least, we got the leading economic indicators for the month of October. So we had a 0.7% back in September, and for the month of October, it shows 0.2%. So slower, but obviously much better than a negative. So we'll jump over to headline news here, and basically the markets closed upwards. So everything did pretty well. We also had some quarterly results that came out with some companies, and they did pretty well. So the stock market closed upwards today. So we'll jump over to the bond market, and as a result, it's pulled money from the bond market and went into the equities. So tough day for the bond markets. We had a pretty big swing. So we were at 101.19 yesterday. We were closing at 100.84, so that's a 35 basis point jump. We started the day a little bit lower than where we left off, and for the day it was at 31. So we had pricing for the worst. As you can see, we tested the 100-day moving day average. That's kind of our new floor for this trading range, and and even went much further than that. So we got to really be careful here as this becomes our floor, and we got this downward trend down this. So it's in the trading range, but we got to be very cautious, and this could get pushed further down if this keeps happening down here. Every time we've touched this range up here, we've been getting pushed downwards. So we could see rates going up a little bit continuing. So we got to be very cautious as we approach the holiday season here as to where rates are going. Especially with the taper talk coming up, will probably be in December with the last Fed meeting. Some people are expecting maybe there might be some tapering taking place at that last Fed meeting of the year. So be very cautious. But as of right now, we do have, as a result of the nice gain in the equity markets, the bond markets not so well, which fares to a little bit higher interest rates today. All right, folks. Again, I hope you guys have a wonderful Hanukkah. Hope you guys have a wonderful Thanksgiving. Thanks for watching, and we'll look forward to seeing you guys next week. Take care.